Triangle trading patterns can be extremely profitable. If you know what you're doing, you can already build a trading strategy just purely based off trading triangles and you can start making money. In today's video, I will not share crazy new setups with you, but I will share with you some basic knowledge about technical analysis, specifically about triangle formations. I will share with you 3 charts and you can see whether you can spot the triangles. And of course, I will tell you how I would personally trade those. When it comes to triangle patterns, all you need to know is that there are 3 types of triangle formations. The first type of triangle formation is a symmetrical triangle. The second type of triangle formation is an ascending triangle. And then of course we do have the opposite, a descending triangle. Drawing triangles is basically very simple. You just have a market, in the case of a symmetrical triangle, which trades like this. In the case of an ascending triangle, you do have a market which trades like this, which means we do have a horizontal upper resistance, and we do have an ascending support trend line. That's why it's called an ascending triangle. And when it comes to a descending triangle, we do have a lower horizontal support, we do have a upper resistance. So the market is kind of trading like this. Overall, triangle patterns are neutral patterns, which means there is a higher chance that if a market entered bullish into the triangle, we will see a bullish breakout. On the other side, if a market entered bearish into a triangle, there is simply a higher chance that we will see a bearish breakout. In the case of a symmetrical triangle, if we quickly look at this once again, if the market entered bullish into this triangle and then ranges for some time, there is, just looking at the probabilities and past price behavior, a higher chance that we will actually see a bullish breakout. Vice versa, if the market actually enters bearish into this symmetrical triangle, there is, if you're just looking at enough charts, a higher chance that we will see a break towards the downside. It's the same thing when it comes to an ascending triangle. If the market entered bullish into this triangle, there is a higher chance we will actually see a bullish breakout. If the market entered bearish into this triangle, there is a higher chance that we will see a bearish breakout. And then of course, when it comes to this descending triangle, if the market entered bearish into this triangle, there is a higher chance that we will see a break towards the downside. And on the other side, if the market entered bullish into this triangle, there is a higher chance that we will see a bullish breakout. Of course, triangle patterns can also be reversal patterns. There is no guarantee that this will happen 100% of the time. Could also be that the market enters bearish into this ascending triangle formation, and then we see a breakout, and in this case, of course, it was not a continuation triangle, but it was rather a reversal triangle. We entered bullish, and then we came out once again towards the upside. Trading those triangle formations is actually pretty simple, and there are exactly 2 ways how you can trade those triangles. First of all, let's quickly remove those drawings, because otherwise it's a little bit confusing. And let's start once again with the symmetrical triangle. If the market enters bullish into a symmetrical triangle formation, there are 2 ways how you can trade it. First of all, you can enter a trade if the market is still trading in the pattern. In this case, you can simply go ahead and enter a long position the moment the market retests support, and you can try to anticipate a break towards the upside. Now, this is technically speaking not even trading the triangle, because you simply enter a long position as soon as the market is retesting support. So I do not consider this a valid triangle trade. The first valid triangle trade is actually as soon as the market breaks above this resistance. Then you can go ahead and enter a long position, and it's simply a breakout trade. You're entering a position the moment the market broke out of the triangle formation. Same thing when it comes to an ascending triangle. If we enter bullish into this pattern, you can simply go ahead and enter a long position the moment the market breaks out of this triangle formation, trying to catch a nice move towards the upside. Of course, it's also the same thing when it comes to descending triangles. This is the first way. The second way is that you can wait for a breakout followed by a retest, and then you can go ahead and enter a position to capitalize on the next move. If we once again take a look at the symmetrical triangle formation, if a market enters bullish and then we see a breakout, then you can go ahead and actually wait for a retest of this previous resistance, which at that point is turned support, and then you can go ahead and enter a long position Let's take one more example when we look at the descending triangle formation. Market enters bearish into this triangle. There is a higher chance, just looking at probabilities, that we will see a break towards the downside. You are anticipating a break, you see the break, you wait for a retest of this previous support, which at that point is turned resistance, and then you can simply enter a short position, meaning you're betting on the market to go down and trying to capitalize on this next drop towards the downside like that. Now I want to share with you 3 charts, and you can immediately see whether you understood the principles of trading triangles, because all 3 of those charts contain one crazy triangle. Let's start with the first chart, MSFT Microsoft. Can you spot the triangle? I will give you 2 seconds. 1, 2. If you were not able to spot the triangle, don't worry. The more often you look at charts, the easier it will be. But if we look at Microsoft, there is a very clear ascending triangle formation if we're just connecting those previous lows right here. And on the other side, of course, we need a second line, which is this upper resistance. We are simply connecting those 2 previous highs, and voila, we do have an ascending triangle formation. Now you can go ahead, as I just mentioned, there are 2 ways of trading the triangle. First of all, you can go ahead and enter a long position the moment Microsoft breaks out of this triangle formation. Sometimes you will get caught up in a fake out if the market actually breaks out, but then immediately reverses back towards the downside. But again, trading is not a 100% guaranteed game. It's all just about probabilities playing out over time. This is scenario number 1. In this case, your trade would already be in a quite nice profit of 25%. Or, as I mentioned, you can wait for a breakout followed by a retest. In this case, of course, there will be setups where you will simply not get a retest of the previous structure. You can see so far on Microsoft, we also did not get a retest of the previous structure. So in this case, you simply missed out on a trade. Again, trading over a long period of time is predictable, but when it comes to one individual setups, it's all basically luck. If we take a look at the second stock, AMD, you can also see a triangle formation. Quick hint, it's not an ascending triangle formation this time. 1, 2. Did you spot it? It's very obviously an asymmetrical triangle formation. We do have this lower support, we do have this upper resistance, and in this case you can see AMD entered bullish into this triangle. We are simply connecting those 2 previous lows right here, and on the other side connecting those 2 previous highs. We do have what's called a symmetrical triangle formation. Setup number 1, you could have entered a long position right here the moment AMD breaks out of this triangle formation. Then you can see AMD actually melted another 80% towards the upside. Or you can simply wait for a retest of this previous resistance, which at that point is turned support. Maybe we will still see it on AMD. If not, then once again, this was a setup where if you waited for the retest, this would have not been a regular trade because there was simply no retest whatsoever. Number 3, Tesla, ticker symbol TSLA. Also right here, we do have a very obvious triangle formation. And of course, we already covered ascending triangle, symmetrical triangle. So the only one which is left is a descending triangle formation. On Tesla, you can see if we do connect those 2 previous lows, and if we connect those upper highs, we do have a descending triangle formation. Simply basically support right here, upper resistance, that we do have a descending triangle formation. We entered bullish into this pattern, or Tesla entered bullish into this pattern. So overall, there is a higher chance that we will see a break towards the upside. Again, scenario number 1, we will see a breakout and you simply enter a long position the moment Tesla breaks above the resistance. Scenario number 2, you wait for retest and bullish confirmation, and then you enter a long position right here. Of course, there is always a third scenario, which is that Tesla simply breaks towards the downside. In this case, it was a reversal pattern because Tesla entered bullish and then breaks towards the downside. It's not a continuation trade, but if that is also part of your trading strategy, you can 100% go ahead and trade it. This is basically everything which you need to know when it comes to trading triangles. As I mentioned, the more often you actually look at charts, the easier it will be for you to spot those triangles. And of course, the easier it also is for you to trade those triangles. Now, it all just comes down to building a proper trading strategy, which allows you to capitalize on triangles over a long period of time. If you want to check out my trading strategy, you can simply click the first link in the description and join the Elite program. I basically break down everything in there. And of course, you can also sign up for the free trading newsletter. Next week, I will once again publish a new newsletter talking about markets, talking about trade ideas, and everything which is relevant for those trading weeks. If you enjoyed today's video, I'd really appreciate, as always, if you smash that like button below. I will see you next week and trade those triangles and keep your long-term vision.